Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement, and no, it's not about secret agents, but it does hold secrets about how this company, Senseonics Holdings, wants you to vote. It's all about directors' executive pay and who's auditing the books, so let's see if we can decode what they are trying to pull. First off, good news for the company, they aren't paying any extra fee for this filing. Now let's get to the important dates. The annual meeting is happening in May of next year, 2025, and if you want to have your say, make sure you're a stockholder of record by March. Alright, now what's on the agenda? They want you to elect 4 directors, give a thumbs up or down to their executive pay, and confirm their choice of accounting firm. Seems straightforward, but let's dig deeper. This section clarifies why you received the notice. It's all about being modern and saving paper by using the internet. If you want a paper copy though, you can ask for one. Can't make it to a physical meeting, no problem. It's virtual. Just head to the website on meeting day and use your control number to participate, and you can even ask questions. So what exactly are we voting on? Electing directors, approving executive compensation, and ratifying the selection of their accounting firm. Make sure you know where you stand on each. Here's a crucial detail. If your shares are held by a broker and you don't give them instructions, they might not vote your shares on key issues like electing directors or executive pay. You have to tell them what to do. Let's meet the nominees. We have Stephen DeFalco, a life sciences veteran, Brian Hansen with tons of medical device experience, Douglas Prince bringing the financial expertise, and Douglas Roeder, a venture capital guru. Brian Hansen was just appointed to the board of directors in March 2024. His main qualification is 30 years of experience and now working for Accession, the company's distribution partner. So he is clearly not an independent director. The board is telling you to vote for each of these nominees, but remember, it's your call. Moving on, we see Sharon Larkin, who brings human resources experience, and Kamichiro Sato adding global healthcare insights. A mix of backgrounds is always good. Time to talk about independence. The board checks who's independent to make sure decisions aren't swayed by personal interests. Seems like most directors pass the test, but some, due to their roles in other companies or within Senseonics, don't qualify. The company separates the roles of chairman and CEO, believing this structure improves accountability and oversight. It lets the CEO focus on running the company while the chairman keeps the board in check. Risk management is key, and the board oversees this with different committees handling various risks like financial, legal, and cybersecurity. It's like having different departments watching out for different threats. The audit committee keeps an eye on the financial reporting and makes sure everything is above board. They also pick the independent auditors, KPMG LL. The fees paid to KPMG LLP for audit and tax services. Audit fees totaled $1,000 and $10,125 last year, while tax fees were only around $74,542. Here's where you get to weigh in on executive pay. The board wants your approval on an advisory basis of how they're compensating the top dogs. Finally, they want you to ratify or confirm their choice of KPMG LP as their accounting firm. Even if you approve, they can always switch later if needed, so it's not a forever decision. Here are the names of the key people like Timothy Goodnow, the CEO, and Rick Sullivan, the CFO. Knowing who's in charge helps understand the company's direction. This section shows who owns the most stock. PHC Holdings Corporation owns a big chunk, making them a major player. It's good to know who has the biggest stake in the game. Looking at individual ownership, Timothy Goodnow owns a decent amount, and we will have a look at that when we hit the financial analysis. Alright, let's get to the money. Here's what the top executives made. The numbers show Timothy Goodnow, the CEO, made around $3 and $3 million, and Prakul Jain, the COO, around $1.9 million, and Kenneth Horton almost $1.3 million last year. These amounts include salary, bonus, and stock awards. Now, regarding salaries, most received a small raise of around 3% to 4% from the year before. It's not huge, but it's something. This section shows outstanding stock options and awards for each of the top execs. For example, Goodnow had a few exercisable options and a lot of unvested stocks. We want to see the company's success reflect on shareholders. Time for the pay versus performance section. This is where things get interesting. How does executive pay stack up against how the company actually performed? Here, CAP is compared with total shareholder return, total revenue, and net income for the last 3 years. For each of these factors, CAP is put next to net income loss from 2022 to 2024. These metrics offer a peek into how well company performance reflects on the executives. Basically, these are very boring but very helpful because it is a very detailed view on how we should evaluate their financials. There is so much info here about the last 3 years. What are they actually trying to say in these details? What can we trust? Ultimately, it's up to you to look at the numbers and form your own analysis. Let's talk about deals with related parties. These are transactions where someone connected to the company, like a director or major stockholder, is involved. The biggest deal is with Ascensia Diabetes Care, their distribution partner, which accounts for a huge chunk of their revenue. This relationship is crucial, but also means they're heavily reliant on one partner. PXC Holdings Corporation helps them get some serious funding, so they're obviously very connected to that company. That said, it helps keep the ship afloat. This part makes sure everyone is playing by the rules and reporting their stock ownership changes correctly, and it looks like everyone's being compliant. Finally, a quick note that the board doesn't know of any other business coming before the meeting, but they're ready to handle anything that pops up. So what's the story here? Senseonics relies heavily on a key partnership and major financial events, including with PHC. Most of those events seem to have helped the company grow, at least from an operational perspective. The reliance on third-party revenue streams seems dangerous, especially if the company wants to be valued at multiples similar to the competitors. They need to show they can go on their own, or maybe that isn't even the plan. Now for a balanced view. One notable opportunity is expansion into new markets to diversify sales streams. One of the clear risks relates to debt levels and heavy partnerships. It's never ideal to be so reliant on a single source. Overall, this proxy statement is standard stuff, but it does give you a peek into the company's governance and financial relationships. So when you vote, consider the director nominees, the executive pay, and the auditor choice. Thanks for watching Corporate Decoder. If you found this breakdown helpful, hit that like button, drop a comment with your thoughts, and subscribe for more financial deep dives. See you in the next one.